She's looking like a contest. Or you can act like they care less. But I liked it better when you were on my side. The battle's in your hands now. But I would lay my armor down if you said you'd rather love than fight. So many things that you wish I knew, but the story of us might be ending soon. Now I'm standing alone in a crowded room and you're not speaking. And I'm dying to know, can you like me?
Hello. Hello. Hey. Hey. Too loud. Okay. Hey. Yes. Yes. No. Hello. Blah 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 blah. Bitcoin. Bitcoin.
Thanks a lot. And the other micro is the same, or is it? Should we test it? He's trying.
Hello.
Yeah, I think it's okay. Yeah, but we don't need to mix at the very beginning, right? Do we? Well, yes, we do, because we have Fernando and you. So,
Hello.
Blah blah blah. Hello. Hello, everybody. Hello. 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 Yeah. Same way. So close. We are probably like this.
En Vodafone, el Black Friday no dura un día, sino medio año. Esta semana pásate a
Don't know why I still slept on my side of the bed. Emptiness when you were ringing in my head. Told myself I really had to move along now. Stop regretting all the things I left unsaid. Yeah, yeah. So I tore up your letters, took a picture of my wall. I deleted your number. It was too hard not to call. Felt a little better, told myself I'd be fine. Got to live for the good times up ahead. Yeah, yeah. 'Cause everywhere I go, there's a love song that reminds me of you. And even though I knew I had to be strong, I was still not over you. I just still believed, and I could see how there's nothing left of you and me. That time is over, and I'm so not over you. All my friends tried to tell me that I'd find somebody new. Why waste time being lonely when there's nothing left to lose? Anything to get you out of my mind. I'm a fool if I thought I could forget. And I could not forget, 'cause everywhere I go, there's a love song that reminds me of you. And even though I knew I had to be strong, I was still not over you. 'Cause I still believed, and I could see, there was nothing left of you and me. That time is over, and I'm so not over you. Now I've found a way to keep you there beside me, to where my love won't be denied. I can only hope to keep you there and guide me. There's no more need to hide from all that's pain inside. Everywhere I go, there's a love song that reminds me of you. And even though I knew I had to be strong, I was still not over you. 'Cause I still believe that I could see how there's nothing left of you and me. That time is over, 'cause I'm so not over you. So not over you. That time is over, baby, 'cause I'm so not over you.
Here's a smoothjazz.com holiday hot pick from Sharon Marie Klein. God rest ye merry gentlemen. A benediction for peace on smoothjazz.com Global Radio.
God rest ye merry gentlemen, let nothing you dismay. Remember Christ our Savior was born on Christmas Day to save us all from Satan's power when we have gone astray. Oh, tidings of comfort and joy. Oh, tidings of comfort and joy. Comfort and joy. From God, our Heavenly Father, a blessed angel came, and unto certain shepherds brought tidings of the same. How that in Bethlehem was born the Son of God by name. Oh, tidings of comfort and joy. Oh, tidings of comfort and joy. Comfort and hope. Comfort and love. Comfort and peace and joy. God rest ye merry gentlemen, let nothing you dismay. Remember Christ our Savior was born on Christmas Day to save us all from Satan's power when we have gone astray. Oh, tidings of comfort and joy. Oh, tidings of comfort and joy. Comfort and hope. Comfort and love. Comfort and peace and joy. Bring love and peace and happiness
Global broadcast now in progress. smoothjazz.com.
New from Jim Samuel, Now That You're Gone, featuring Tony Neenan on flugelhorn. This cool jazzy song is featured on the new Harry Bosch novel audio songbook, The Wrong Side of Goodbye, written by Michael Connolly. Find Now That You're Gone in the Listening Loft, as well as JimSamuelProductions.com.
Rising star, soul jazz singer-songwriter Lindsay Webster makes her Shawnee debut with her album Back to Your Heart.
Back to your heart. Gotta give you back, so nowhere.
Lindsay Webster, the first vocalist to hit #1 on the contemporary jazz charts since Sade, delivers smoky, honey-toned vocals on soulful original melodies.
My love was always too much. You could never handle it.
Find Back to Your Heart on Shawnee Entertainment in the smoothjazz.com listening loft, iTunes, Amazon, and on lindsaywebstermusic.com.
Zangy Records presents the 17th international album release from guitarist Patrick Yandel, Ethos. Ethos, the Greek reference to the power of music and its effect on listeners' emotions and behaviors. You'll be moved by Ethos. Find it now on Amazon, iTunes, CD Baby, and discover this world-class guitarist at PatrickYandel.com.
You'll recognize this voice.
Come on, baby. You know I'm gonna treat you like a lady.
This recording artist has been a front man for music legend Carlos Santana for 20 years.
Keep it on. Gotta keep on. No matter how it keep on.
11-time Grammy-winning singer-songwriter Tony Lindsay releases his first international single, Only If You Knew What My Eyes See, from producers Randy Amata and executive producer David Case.
Baby, only if you knew what my eyes see.
A feel-good, soul-smash single.
Baby, I got
Find it now on Tony Lindsay's self-titled album in the Listening Loft, iTunes, CD Baby, and TonyLindsay.com.
Celebrated over 4 days in one of the most unique environments in the world, Bavaria, Germany. The Smooth Jazz Festival Augsburg will feature the absolute top names and hottest young guns in the international smooth jazz scene, December 29th through January 1st. Shack Attack, Jeanette Harris, Brian Bromberg, Ollie Silk, JJ Sanseverino, Huge Groove, Lindsay Webster, and Ilan Trotman will help usher in 2017 as you savor the last days of this year in Europe with concerts, gala dinners, all-star jams, and more. Book your reservation now and get your tickets at augsburg.smoothjazzfestival.de. Sponsored by SmoothLounge.com Radio and SmoothJazz.com Global.
SmoothJazz.com. SmoothJazz.com. Yeah, can I take you there? Yeah, can I take you there? Take you there. Yes. All right. That makes me feel there never be another so good. Yeah, can I take you there? The one who understands me now. Yeah, can I take you there?
What?
Take you there. So that makes me feel there'll never be another you. So good, so good. Oh yeah, can I take you there? The one who understands me tonight. Yeah, can I take you there? Come on, take you there. Anywhere. Oh, come on. No doubt.
Hello. We're going to start. That's a robot moving. Short welcome from my end as kind of host from the side of IAC, this building and this space, but also this lab, Fablab Barcelona, and the Fab City Research Lab, which is the project that I'm leading in this place. and that highly connects with the spirit and the vision of the Bitcoin community, not only in Barcelona, but worldwide. If some of you don't know, we are advocating for the distribution of production, in this case using digital fabrication tools, which go beyond only 3D printing, but also other types of tools that allow people to produce their own things, to produce their own tools. And we are advocating basically to the distribution of everything. So we also see a lot of connections with the potential connections in translating this into close collaborations with the idea of implementing blockchains into supply chains, for instance, of materials, into the distribution of files for collaborative design worldwide, and basically to advocate to this new economy in a practical way, mixing the digital and the physical worlds. So I'm really happy, as I think this is our third event we organized together. I hope that there are a lot more from each other. I leave you with Carlos with the details of the conference. And again, welcome everyone, and thank you for coming.
Thank you, Tomas. I will move over to this side just because the streaming webcam is over here. So welcome everyone, good evening. We are connected tonight over streaming live, and we will have two guests from our panel connecting over from Canada and the UK. So we are very happy to have this event happening tonight from the Barcelona Bitcoin community. We've been pursuing this for more than a year because we always thought decentralized models are great, but how do they get governed? And that was always the question. And hopefully today we get some answers to these questions. We will get answers from William Mugajar, who will be our first speaker, based out of Canada. He published a book and probably will talk about that. We will have also Fernando Gutierrez, who's physically face-to-face with us. He comes from Malaga or Madrid? From Madrid today, so he's been traveling today. And we have Manfred, who was presenting his model once here at the Fablab venue about BitSquare, which is also a DAO model, and he will introduce that. And last but not least, we will have Adam Vaziri, who sent us a video, or is on YouTube. You can watch it over YouTube as well. And hopefully after seeing that video from a legal perspective, liabilities, responsibilities, and all that, we will start a discussion with our four panelists. I apologize up front for, I don't know, the poor quality. We've tested as much as we could, but we have two remote speakers. We have only the webcam mic to get us all connected, and hopefully the audio quality is good enough to have a very interesting debate. The last 20 minutes we will open to the floor. If you have any questions, comments, ideas that you want to share with the group, that would be great. So thank you all for coming. And let's see if we have William already connected. I will try to open the video chat, the room, for him to get on with us. So let's see. There's no one in yet. Okay, so while we wait for him, let me ask you one or two questions about this, because this is not for novice. This is not introducing blockchain or Bitcoin. I hope that most of you know that this is a phenomenon that is already 8 years old. The white paper started the whole thing 8 years ago. It was published October 31st, and the first block was mined in January 2009. Since then, we've seen, well, a real hurricane of ideas and models, and we were all discussing models, how can we implement this technology. Some of you may have heard about Ethereum, blockchain. In the last 6 months, we're talking about Hyperledger and the Linux Foundation being behind that, Golem. So who is absolutely new to this? Who doesn't know anything about blockchain or Bitcoin? Okay, I'm sorry for you. I mean, this is already second level, kind of. But you can find lots of materials, and we will have surely events to speak about Bitcoin or the blockchain soon. So this is really to talk about this new technology, and when we embrace decentralized autonomous organizations, how they function, how the rules work, and more recently we've seen initial coin offerings or cryptocurrency offerings, which are now capturing a lot of attention. As a matter of fact, in 2 weeks, 5 or 6 projects made it up to close to $30 million in investments. And by the way, the biggest, oh, I see that we have William already online. Hi, William.
Hi, can you hear me okay?
Let me put up the volume a little bit. Speak again, please.
Yes, let's try this one.
Okay, I think the crowd.
Right, volume.
Okay, perfect. I put you up to the screen so that people can see you. Just bear with me 1 sec. There you go. You're on screen now. I think everybody can see you. The floor is yours. So welcome to Barcelona this evening. We are all very excited to have you here speaking to the crowd. I will twist the camera so you can see the crowd, if that's okay, and the people can see you.
Better?
This is great. I think people can hear you. Perfect.
If I use the headset like this, is it better than before?
It's kind of the same.
The same?
Yeah.
Okay, then I won't use it then.
Okay, perfect. Do I have to put up a presentation? Yes. So I put the presentation up on screen?
Yes, okay. Whenever
perfect.
You're ready. Do I see the slides on my end?
Sorry, say that again.
Can I see the slides on my end?
There you go.
Perfect. So do I have to tell you when to advance?
I will have to do this. There you go. Presentador, inicia presentación. Okay, we're ready for you to go. You can see the slides. You asked me to pass them, okay?
Yes. Oh, should I start now? Okay. All right. Thank you. Thank you, everybody. I cannot see the audience, so I assume you can see me and hear me. Thank you very much for inviting me to be part of your meetup. I am here in Toronto, and I'm really sorry that I couldn't be there with you in person in Barcelona. As a small token, I am going to have dinner tonight at a Spanish restaurant. That is the closest I can sympathize with you being in. So I'm going to spend less than 15 minutes to talk to you about my views relating to distributed autonomous organizations. Sound check. Is everything okay? Should I speak louder, or should I change anything in the way? Everything is good. All right. Thank you. So some of you know me as an author of the book, The Business Blockchain. I'm also an investor in the space and an advisor to a number of companies. So I am lucky to be involved in this very exciting segment. To start with, I have been changing the way I explain the blockchain. I wanted to start with a context. And I used to go and explain the many parts of the blockchain one by one. But now what I'm doing is I want people to know how to think about the blockchain. If we can advance to the next slide, please. To set the context for the DAOs, I think it's important to see how we think about blockchains. And I've set up the way to think about blockchains into 4 different buckets: as a development environment, as a utility, as a trust services layer, and as a marketplace. So if you start to think that the blockchain is about, first and foremost, a very exciting development environment, where now for the first time we can program money and value together. As a utility, it's about creating and moving value and assets. It's about storing value. And in the trust services layer, it's about record keeping, verifications, custody, rights, titles, identity, naming. And as a marketplace, it's really about creating new economies. And this is where the DAO comes in, because a distributed autonomous organization really starts to challenge the business models of companies the way we know them. Next slide, please. What's really changing fundamentally that the blockchain is giving us is that it is challenging the way the work and value equation is changing. So now we can perform different types of work on the blockchain, and we can be rewarded maybe by tokens, by cryptocurrency. Next slide. And what happens here is that the creation of new marketplaces becomes possible because suppose we do some work that has value. We can earn tokens, and then we can go and spend these tokens in a given marketplace. So, and then we can also have this value from within the marketplace to outside of the marketplace in a specific scenario where we can spend our tokens outside. So the end result is a new economy, that is not unlike the real world that we live in, where we earn money with a salary, but we go and spend it in the real world. But here we're going to be earning cryptocurrency by being part of a particular marketplace, by being part of a service, by being part of creating value. And this is really the innovation of the blockchain. Next slide. What the blockchain is also challenging is venture capital. Because now companies don't just need to go and raise money from venture capital firms. They can raise money on their own by creating what is called an initial cryptocurrency offering. So this challenges very much the traditional work that VCs have been doing. And it's very exciting for a number of companies because they can have more control of their own destiny. And they would give up less ownership to VCs, but rather they will give it more to all of the users that are contributing in helping them go forward. So cryptocurrency offerings are challenging the traditional VC model because it's providing liquidity much faster, challenging how we expect the returns to happen. Next slide. And this cryptocurrency can occur at any point in time. If you look at the life cycle of a given company, from the development stage at the beginning to the launch, and then to growing the company, you can raise a cryptocurrency sale, you can initiate a sale at the beginning when you're just starting to develop, or you can do it at the launch, or you can do it later. I am seeing companies now that have raised traditional money from VCs, and now they are going to launch a coin after. So there is no particular timing for when to launch the cryptocurrency offering. Next slide. About 2 years ago, when I started to look at the distributed autonomous organizational models, I put together this framework as a way to think about how a autonomous organization that depends on the blockchain could be organized. And if you look at all these different layers, it can get complicated. It is not just about spinning a coin and raising money and then pretending that everything is going to be okay very easily. You really need to think about how your users are going to bring you value. Is it going to be a collaborative process? Is it going to be more cooperative? What's the stake? How is the stake going to be recorded? Do they have to buy it? Is it going to be given to them? Or do they have to earn it? And how will they spend it? The relationship between the spending and the earning is very important. That is a very important aspect that is at the heart of the business model. You can have points, you can have rewards, you can have tokens, and other questions will relate to the governance. How will you govern? How will you make changes? How will you get input from your users? How will you provide gains? How will we know that you're doing well or that you're not doing well? Next slide. So what I ended up doing recently, and this is a post that I wrote yesterday, which is how to evaluate an initial cryptocurrency offering. And how to evaluate it is really at the heart of evaluating a distributed autonomous organization. Because ICOs and DAOs are kind of tied at the hip. Right now, all of the DAOs that I hear about start by raising money in an ICO manner. So you have to look at the 4 characteristics. One, there are startup characteristics because all of these companies are like startups. So you have to look at them as a startup. And this is the traditional way of looking at a particular company. So if the blockchain did not exist, VCs would continue to look at companies just like a startup. This is where you look at the product, at the market, at the team, you look at the competition, and this is all traditional stuff. I'm not going to rehash it. This is what VCs make a living out of. Then the second aspect relates to the crypto sale process itself. I call it the crypto sale resiliency. This is where the crypto blockchain comes in. And this includes how you are really doing the mechanics of the sale, who is doing it, who has written the smart contract to initiate the sale, how are you handling security, are you doing any audits, what blockchain infrastructure are you using, and have you talked to others that have done it? So this is really the actual mechanics of it. The third item is the operational transparency. Because now, if you are going to be a DAO, everything is going to be in the open. So it's like becoming a public company from day one. And not all companies can do that. So the level of transparency that you start to have is very important. And if you cannot deliver the transparency, do not take the path of doing an ICO and wanting to say that you want to be a distributed autonomous organization. Because you have to self-govern yourself to higher standards. Otherwise, the regulators are going to come and spoil happen. So some of the questions there would be including, are you providing data that anybody can see your progress? Have you been listing all of your work in GitHub, for example? Can we go and check your progress? Can we check your track record? Have you been blogging about what you're doing on a regular basis? And are all the team members identified that you're a part of, that the company is a part of? Do you have any external advisors that are helping you and that can be trusted? And do you have plans to go on the public exchanges? Have you been talking to them? Because that provides liquidity, obviously. So when I talk about what's happening today, I'm going to evaluate companies on these 4 different segments, and it's very important to keep that in mind. And in closing, I want to say that, next slide, please. The one thing that scares me the most in the DAO work is the A part, the autonomous part. And that is the part that some companies underestimate. Some of the failures we have seen in the DAO aspect is that the founders started to automate processes that they were not very familiar with. I'm thinking of the DAO, the main one, the big one that flopped in the early summer. They wanted to jump too high too quickly and start to do some things that they did not have experience with. So before you can automate something, make sure you know how to do it in real life. Make sure you have some experience with it. Because the autonomous part is putting operations on a smart contract and having less control as people, as humans. And this is a scary thing. If you don't get it right, then some big issues will happen and there will be some hacking. So take it a step at a time. The distributed aspects are important. The decentralized aspects are important. The organizational aspects are important, but the autonomous parts are something that could come later. It doesn't have to be there from day one. I think it's important to nail the business model very early on because it's all about innovation of business models. And then you can nail the other parts. Next slide. So thank you very much for listening to me. And I'm going to come back later for questions as part of the panel. And the only last thing I will say, and you can see here, I'm putting copies of my book in the Chinese language and in the Japanese language, just to say that it's being translated in many languages, but the first 3 languages are from China, from Japan, and from Korea. So the point here I'm making is that the Asian countries are very serious about the blockchain and are very serious about studying it and implementing it. So let's keep that in mind. If you are in Europe or if you're in North America, we should be also be very aware of what might be coming from all of the Asian countries as well. So this is very much becoming a very international phenomenon. Thank you very much.
So thank you, William.
I think you are muted on your end.
Oh, probably.
I am not hearing anything.
That's a pity. There you go. I apologize for that. So now you've heard it, and I think you deserve to see it as well. So let me. This is the room. This is the crowd. Thank you very much, William. You can stay online, or you can take a break, whatever you prefer. We will give stage to Fernando. who is representing and introducing to us the Dash governance model and the DAO. Thank you.
Thank you.
Well, while Carlos works out the tech details, my name is Fernando Gutierrez. I've been part of the Dash team for a bit more than 2 years, I think. I was not in the beginning of the project, but I was in early on. I'm a lawyer and an economist by train, so my role in the team is basically almost anything but coding. And what I want to talk today about is how we manage the Dash project. I don't really love the term DAO because of the earlier flop mentioned by William. But basically, we have what I believe is one of the very few working DAOs at the moment. As I say, my boss is a blockchain, and it's great. So first, I need to get a couple things clear before getting into governance. What is Dash? Dash, what we say digital cash. It's the closest thing to digital cash at the moment, and it's fully functional. It has most of, well, it has all Bitcoin advantages, probably except the size, which is a big one. But it has the code because it's a Bitcoin fork. For those of you not familiar with the concept, when you fork an open source project, you take all the code and then you start working on top of that. But we also keep the upstream changes. So if Bitcoin does any change, we usually introduce it. This gives us a great piece of work to start with because Bitcoin is amazing. It's been 8 years of many brilliant people working on it, so we can take advantage of that, but also build a few key things on top. The first one is privacy. This is not the topic of today, but Bitcoin is not really anonymous or fungible, so we've added a layer of fungibility onto the protocol, which we believe it will be really important in the future. We also have instant and secure transactions. This is not like zero confirmation transactions for in Bitcoin. This is actually irreversible, and there's no possibility of double spend. And then we also have a layer of governance that we'll be talking today about more in detail. So I'll jump. And now we are working on a really great new way to interact with the blockchain that will make it much more easier than anything that we've done before. This should be launched next year, probably some even later this year, and then around first quarter we'll start launching things. And how does all this work? The first thing you need to understand from Dash is that we split the block reward. Everything starts there. In most projects, all the block reward goes to miners, which is great for security because you incentivize a bigger hash rate, which is amazing. But we believe that that's not the only thing you should think about. So we only give 45% of the block reward to miners. This has not been a big problem. We have a pretty high hash rate. We've had ASICs developed just for our algorithm that we introduced. So clearly, there's people who believe that mining, even at 45%, it's great. It all depends on the price of the coin. 45% to masternodes to infrastructure. Unlike other projects, we incentivize that layer, the nodes layer, so the quality and the speed of the network is great, and we can also require many things in exchange of that, and we don't need to rely on volunteers. And then we have the final 10%. It's kept apart for development and projects that help bring the project forward. and that's where governance enters. So masternodes are the key players there, and I need to explain that a bit more also. A masternode is just a node, like in Bitcoin. I mention Bitcoin all the time because I assume it's the project everybody is most familiar with. So these are nodes, they relate transactions, but they also do those special features we have. In order to be able to trust masternodes as a class, not one individually, because we always work with quorums. We select randomly a number of masternodes to perform any task. So we require them to prove they have 1,000 dash. This, at the moment, it's around $9,000. So if someone wanted to attack the network, they would need to buy a big percentage of the network, and then the incentives would be broken, and it would not make any sense. So we defend that way. They get paid, as I said, so there's an incentive to do this, because if not, if you are requiring people to prove things and perform works and spend money, it would be difficult. Right now we have around 4,200. So that gives us a network of nodes similar in size to projects like Bitcoin that's been around much longer. So we can build a lot on top of that. In the right place to make these actors the stewards of that budget that I mentioned before, that 10% of the block reward. These are the actors that decide how that works, and ultimately that decides how the project moves forward, because in the end, money is what pays for the project. So if you decide on the budget, you are deciding on the lines the project is gonna follow, because we don't have a pre-sale, and we don't rely on donations. We rely on the project is independent, it's self-funded. Every block will bring new money. If the project grows, there will be more money available. Right now we have around $50,000 per month to spend on development. If the project goes bigger, that will likely increase. So how does this work? Now going to specifics. It's really easy. It's open, it's decentralized. Anyone can make a proposal directly to the blockchain. You open your wallet, there are some specific commands, you type them, and you make a proposal. Then there are other websites where you can expand the information, because one of the fields in the proposal is an URL, so you can add as much information as you want about any kind of project you want to propose to the network to fund. Then the masternodes, those actors I explained before, that are the most invested in the project because they need to prove their ownership, so it will be like shareholders. They vote on those projects. And finally, those who get approval get paid directly from the blockchain. It's really easy. The stakeholders decide what they want to do with the budget. This is an example last month when Alex invited me to speak here. I opened the wallet, I made a proposal to pay for my travel expenses, and you can see there, the one in yellow. I made it really late, so it had to be fast, and it got approved. And a few days after that, I had my a few Dash in my wallet that could pay for this. I skipped one. Yep, this is one of those websites I was talking about, in which you can expand as much as you want about the proposal. The community knows them. We discuss everything in those websites. We also post everything in the forums. You usually post it before making the proposal, so the community helps you shape what you are going to ask, because we don't want to spam the network with a lot of proposals. You also have to pay a small fee to avoid the spam. You can't change the terms after you make it, so it makes sense to discuss it before. So this is all really new. It's great. It's allowed us to progress a lot. We finance many interesting things. Well, we can check, in fact, that past month what kind of things we finance. We finance. There's a proposal for small salary for the team members. We all get paid some amount of money every month. some people get paid more if they are working full-time. Those of us who are not full-time into this get paid less, but we all get something, and it has a high rate of approval. It's multi-month. We can have multi-month proposals or proposals that work only for 1 month and are one time. Those who are that are multi-month, it's great because you can, if whoever has made that proposal is not delivering, you can defund it. The masternodes can switch their vote to no, and then they stop getting paid. So there's some level of accountability there. We've also paid for sponsorship of subs, travels, specific developments, integrations with different services. Many times before we had this, we have this for 14 months now, I think. Before that, when we approach an exchange or a business or a service asking for DAS to be integrated, there are always issues with costs, with help they needed, and that kind of stuff. We need to raise funds among the community, ask for donations in order to help cover that, or just we had to forget about being integrated. And now when we approach someone, this is also bad because they know we have a budget, so they always ask for something. But we have that tool, and you can behave like a kind of a business and do things much faster and pay for tools and pay for travel and all that kind of things. So back there. This is just the first phase of what we are trying to achieve. There are a lot of challenges yet to work upon, but we think that what we already have is great. We need to improve on proposals, delivery, and execution. Right now, if you get approved, you get the money. There's no way to control if people actually work, apart from reputation and trying to be near that person. But there's not, that person has no obligation to report or to do anything. And we've had a couple cases that we could say that were not good delivery or successes. And well, we'll learn, and we'll have much more of those. And we have also many successes and great things done. We're also working on delegation because proposals are getting super complex, and we are having around 20, 25 per month, and you can't expect everyone to review everything or even to be competent about everything. So we are working on ways for masternodes to be able to delegate their vote on someone they trust, which could lead to more accountability and more deep study of what people are proposing. We're also working on a new engine for more complex structures. There's going to be in the network managers, employees, multi-month contracts that don't work like the ones we had, bounties, split payments, reimbursements, many different things. It's the new system is really flexible. It's going to be launched. It should be launched before the year ends. It's already in testnet, but it will be launched when it's fully ready. If it's not December, it'll be January or something like that. And then with that, it's really flexible, and we can build any kind of structure we want. And also, we need to increase participation. As I said before, we have 4,200 masternodes, but very few proposals get more than 2,000 votes. So there's a part of the community who is not taking part. Obviously, we would like everyone to be involved. Also, people who don't have a masternode because they have less coins, we would love them to take part in the management of the project. We're working on different solutions. There are already people that have shared masternodes, but our solutions outside of the protocol based in trust, and we'll try to put that into the protocol. So even if you don't have a masternode, you can have half a vote if you have half a masternode, something like that. But that way, we would decrease the entry level for participation. Well, that's how it works. There's much more to discuss later. If you have any doubt, please ask later or send me an email or hit me on Twitter, and I'll be happy to to oblige. Thank you.
Thank you, Fernando. Okay, we have our next speaker coming on stage here. Manfred Karre is the core developer for BitSquare. We always praise it as one of the unique decentralized Bitcoin exchanges. Bitcoin as a central currency against fiat or any other crypto. And the more I look at it, the more crypto we can see exchange in there. So your stage. Thank you.
Does this work as well? Or okay. Yeah, hello, everybody. I will try to entertain you until the slides are ready. How many of you have heard about BitSquare? Okay, quite a few. And how many have never heard about BitSquare?
Yeah, hello, everybody.
Yeah, okay, a few. So until the slides are prepared, maybe I give a little bit of background what BitSquare is. Also, BitSquare is a decentralized exchange for exchanging Bitcoin to a fiat currency like euro or dollar, or to exchange Bitcoin to any of the altcoins. There are already many altcoins out, and you can exchange on BitSquare as well, or Bitcoin to any altcoin. And it's implemented in a pure decentralized fashion, in a pure peer-to-peer fashion. Oops. Carlos, I think I messed something up. Here for the slide or here? Where should I move? Where should I use the mouse? Absolutely. Oh, okay. Yes, no, it's weird. Yeah. Okay. Right. I use the mouse. Okay, I'm back. So yeah, but of course we are not talking about BitSquare. We are talking about the DAO, as a decentralized autonomous organization for BitSquare. And the reason why we are interested to build a DAO for BitSquare is because BitSquare needs a network effect. We need a lot of users which are using the exchange to have liquidity, and DAOs help a lot for achieving network effects, because the people who are contributing, who are part of the DAO, they get incentives for also using the project. The main focus on BitSquare is protection of privacy. So you can exchange your Bitcoin in a privacy protecting manner. You don't need to register and so on. And that will cause probably some pressure from some sides. Some countries are not very interested in the privacy of their citizens. Actually, they should protect the privacy of the citizen, but in reality, they're doing the opposite. And we expect some pressure from this side. So we designed the whole concept censorship resistant, and to have also the funding and the organizational model censorship resistant, the DAO model is the best fit. And I think it offers a new model of cooperation in general, and we're very excited to try to be part of this. I think the classical models like VC, venture capital funding with startups and so on, it's okay for many projects, but we can do now better with the possibility of Bitcoin and the blockchains. And yeah, we have a very simple ecosystem in BitSquare. On the one side, we have service consumers, the traders who are using the platform for trading. And on the other side, we have the people who are building the platform, the contributors, developers, marketers, everybody who puts value, who is working on the projects, who are the service providers. And to exchange the value between these two parties, we need a token. And that will be the Square tokens, which is used to connect those two sides. So these Square tokens will be represented as a form of color coin on the Bitcoin blockchain. There is unfortunately not enough time to get deeper into the technical stuff, but conceptually you just can think of another altcoin. It's just a cryptocurrency what can be used in the system. But it's not it's based on the Bitcoin blockchain. And on the demand side are the users, the traders. They are spending the tokens for trading, for paying the trading fees. They need the tokens. And the way how they are paying these trading fees, basically these trading fees get distributed to all the token holders. But it's easier technically to burn the tokens instead of distributing to everything. It has the same effect. It has the same function. When you are taking coins out of circulation, the token holders who have the coins become more rich. And that's the same way like when I send my coins to everybody and share it equally to every token holder proportionally. It's the same effect. It's just much easier technically and also legally to burn the tokens, because by burning the tokens, it's not a dividend payment. When you're distributing your tokens to the shareholders, then you get problems with security laws. That's highly regulated. It will can be interpreted as shares. And that way, by burning tokens, nobody is burning shares. So I think any lawyer will agree, hopefully, that this is out of the security issue. And on the supply side, we are issuing tokens by sponsoring a contributor. I will explain it a little bit more in detail, but there will be a process when somebody is sponsoring a contributor, like it's basically like donating to a project. By this activity, by this sponsor activity, you are creating new tokens, like a miner in Bitcoin who is mining, and when he finds a block, he has the right to create new Bitcoin out of thin air. He brings money basically. In this model, the one who is funding, who is sponsoring a contributor, has the right to create new tokens. And of course, there will be a market, so these tokens will be tradable over BitSquare, so the demand and the supply side can match together. Yeah, I want to go a little bit more into this issuance process. So there will be initial issuance, where the people who have worked so far on the project get their share of the overall value of the project. So we make an initial distribution of a certain amount of tokens. And after this initial distribution, we will issue in a regular cycle every month, basically. We will issue new tokens to the contributors. And there are 3 phases. The first is we need to set the conversion rate. How many tokens is the price of 1 Bitcoin? So let's say for 1 Bitcoin, you have you receive 1,000 tokens. So that's the conversion rate. That's basically based on the market price, but it might be different to the market price because we want to use it for creating more or less incentives for the sponsor model. But it gets more clear afterwards. And the second cycle or second phase will be that the contributor, when he has done some work, so we do it a little bit different like on Dash, because when you give the money upfront before he has done the problem, then basically you need to put the money in an escrow, and then somebody need to approve if the money was done correctly and so on, if the work was done correctly. And when you pay after the fact, after the work has done, it's much easier because everybody can judge the work. And of course, the contributor has to take a certain risk because he has no guarantee to get the money for his work, but he can make very small work packages to work just a few days. And basically all the initial contributors have worked the same model. Everybody has worked without any guarantee to get ever paid for this. So I think it's also fair to go on with this, and it makes the whole process much easier. So a contributor makes a proposal or a funding request. I want 10 Bitcoins for this amount of work, what I've done. And then it will be up for voting. So every stakeholder, every Square token holder can vote on this proposal to be approved or declined. When after 1 week or so, when this approval process is over, then we are in the third phase where any sponsor, that can be anybody, can pay the contributor a part or the full amount what he's requesting. When a contributor wants 10 Bitcoin, I can pay him 5 Bitcoin. And then we're using this conversion rate from the first phase and calculating how much tokens I can issue for this. So when I'm sending 5 Bitcoin to a contributor and the conversion rate is 1,000, I create 1,000 tokens to myself. So I'm like in Bitcoin the miner, I have the right to issue new tokens for myself, Square tokens, and I'm sending Bitcoin to a contributor. The contributor only receives Bitcoin, but he can sponsor himself when he wants to get Square tokens, or he can buy it on the market. And the reason why we don't use the price is, first, it's a little bit more complicated technically to implement, and the second is with the conversion rate, which is voted on, we have more flexibility because people it's a little bit of work included because you have to verify if the work is really worth this money, and it's easier to buy it on the market. So when it would be exactly the same like the price, there would not be incentive to do this extra work and create money by sponsoring and not buying the tokens on the market. So basically, the people who are doing the sponsoring, they should get a little bit more like the value on the market. And with this, we can manage the distribution. And of course, this approval. Oh, wait, I say one thing more to. Yeah, in the second step, why we need this approval? Because without the second step, a contributor could pay himself and could create money out of thin air and could print money for bullshit work which does not help the project, and we want to avoid this, of course. So the second part is basically the critical part where the managers of the project need to make the right decision. That was a good word, that it's worth the money to invest, and that's not, and that will not be accepted. And of course, that here comes the governance in. Initially, it will be only based on voting, based on the Square stake. So the more tokens you have, the higher is your voting weight. But that's not a very good model because it doesn't mean that the people who have a lot of tokens have all the information to make the right decision. And it also doesn't mean that they have the right incentives. So midterm, we want to move over to a model where the contributors get a very strong influence because the contributors, they are usually the best informed people in the process. So they have a lot of information to make the best decisions. But that might also not work so well because some developers, for instance, they're often not good managers, or maybe there's a conflict of interests, and or they're not interested to do this extra work. So I think long-term, we need a more sophisticated governance model. And that's a big challenge and will be a long, ongoing effort, not only for us, for many other projects as well, to develop the right tools for this, for communication tools where you can efficiently communicate without getting spammed by trolls and wasting energy in noise. Decision-making process tools like liquid democracy is a very interesting tool where, like delegative democracy, where you can give your influence to somebody else who has whom you trust and who has more information and better is more competent to make the right decisions. And reputation will be very important. Those people who have built up in the past a reputation by what they have done for the project, they should have a higher influence in the project. And very important is that all this this move or this transition from the initial version to this long-term goal can be done in the DAO itself. So there will be from the beginning some ways where people can make proposals to improve stuff, then can be voted on, and then everything can be changed basically. Of course, important stuff should not be changed easily, so you need higher voting percentage to change fundamental rules, but basically the DAO should be constructed that it can improve itself. And of course, it's all not so easy in reality like it sounds here on the paper. And there are certain risks. One risk is the majority attack. So the majority of the token holders, they could just pay themselves and make themselves rich. But in an open source project where everybody can fork, when they do this, there are very fast people there who say, what you're doing is unethical. We are forking the project, we make a copy of all your work, and we are trying to get the network effect on our side. And that happens quite often in the cryptocurrency space with the Ethereum hard fork. That was one good example where they made a decision which was not really accepted by a big part of the community, and then there was a fork, and now they have a problem that the it has split up. So I think when they would be so stupid to make a majority attack, they will they will risk that somebody fork away and they are losing everything. And the economic incentives are also misaligned because they would destroy their own stake. So it would be a very stupid decision. And at the end, this fork risk is the kind of like security that the management is doing the best what they can, because when they are mismanaging the project, yeah, they get forked away. The major risk for myself, from my point of view, are software bugs and implementation bugs. I mean, it's very tricky. You're programming money, and we have seen with the DAO and with the hack where 70 million got stolen, that it's a really serious problem, and you have to take very much care how to implement it, to build enough firewalls in that, for instance, we want to do something that you cannot create more money, like something like 50 or 100,000 euro a month in tokens. So there will be limits that the damage can be limited and so on. And that's a big challenge for sure, but with a lot of care and with slow development to the right direction and not try to build too much in once. I hope we get there. Of course, there can be economic flows. Maybe, maybe it does not work from the economic side. We try to solve this by getting a lot of advice from different people, from economic people who are more experienced in economics. But I'm not very concerned on that side. On the legal side, of course, it's always challenging to do something in that area. I'm in contact with lawyers. So Adam is one of the lawyers with whom I spoke already, and I'm pretty positive that this model is now fine on the legal side, because this app token models that you have a currency which is used for using your service, that's already many times implemented, like Ethereum. To pay the fee for your smart contracts, you need the Ether. It's not primary investment token, it's primary access token to the software. And that's now this model as well. And yeah, the biggest challenge for sure is the governance, but that will be an ongoing development. And I hope that with the governance, when we find the ways how to solve it, that it will also help other areas outside of the cryptocurrency space. Like, I think that our democracy requires a lot of improvements. And I think we are experimenting new models how to solve this. And maybe someday the broad audience can learn something from this. So to summarize everything, I think this DAO model is really open and permissionless. Anybody can become a contributor, anybody can be a sponsor, anybody can be a token holder and can get influence. So there's really no central controlling party. At the beginning, of course, I will be it because I'm the main stakeholder, because I built the project, but that should get diluted over time. And when more people are joining and more people are working on the project, it will evolve over time automatically. And the very important part is that we are not accumulating funds, not like the DAO collecting 150 millions without any reason and then waiting for the next hacker. There's no reason why we should make an ICO and collect 10 millions and then have a lot of responsibility and problems when we only need to pay maybe 40 or 50,000 a month for the developers who are working on the project. Much better to ask only for this money, or not ask to invest per month exactly that what's needed and not more. And I think with that you avoid a lot of problems and headaches and legal risks. And I think it's really decentralized. There is nobody really in charge of controlling anything, as it's really everybody can be a part of any area. And I think it's also autonomous. I'm not 100% sure with this. And as William said, this autonomous part is maybe a very critical part. Because when it develops in the wrong direction and it's autonomous and you cannot stop it, it's maybe not a really good idea to have designed it. So you have to have at least a lot of flexibility, that it can self-adjust and that it can fix by itself. I think that's very important. And this idea is to have smart contracts and code is law and we don't need any humans anymore it's not a good idea, because I mean, when it goes in the wrong direction, then you want the humans who stop it and say, no, that was not intended. And that brings to the last point, that humans are key. I'm not a fan of these ideas that smart contracts do everything in the AIs. I mean, then the humans are the friction and they will kill us away. the humans, they have abilities like creativity, which will hopefully never be replaced by AIs or by robots. And I think we just need to get rid of the mechanical work which is waste of our resources and of our potential, and focus and make us free for doing that what we are best in. And I think in this DAO models, the human are a key factor. They have to manage, they have to make the right decision, they have to steward the project in the right direction. And I think that's need to be done by human interaction. Yeah, and I think this DAO for me, it's a step, as BitSquare itself gives the funding model for creating this DAO now. Also, we need the DAO as a funding model, basically. But this DAO model is tries to solve more generic problems like BitSquare itself as a Bitcoin exchange. And on top of the DAO model, or later when we have the DAO model in place, we need to solve this governance problems. And this is even a more challenging and more broader and more generic problem. And I think the whole society is highly in need of good governance model and better solutions like the current democracy what we have. I mean, we don't want to get trumped the whole world. And hopefully we're trying to figure out better ways how we get there, that people find better ways how they manage to work together, to cooperate together. And for me, BitSquare is kind of like the nucleus, which is delivering the funding, because from the utility of the trading fees, people are willing to pay money for this. And with that, we can build, and we need the DAO as a second layer of infrastructure or tool around BitSquare. And on the third layer will be this governance model, and hopefully it grows more in this direction. Yeah, thank you. When you want to learn more about BitSquare, just visit our webpage, bitsquare.io. About the DAO is no public information yet out, because it's still in the design phase and we need to check the technical implementation and the legal side, but hopefully in a month or so it will be published, and then you can read in detail about it. Thank you.
Thank you very much, Manfred. And last but not least, I think we have Adam online. So let me check that out. There he comes. You need to do something about the speakers or something, Adam. It's getting too noisy over here. Get out of here. Okay, you've gone on mute. Let me. You can hear me, Adam? Okay, good.
I can hear you fine.
Okay, good. Now it sounds quite okay. Will we show you video, Adam?
Yeah, please go ahead.
Oh, okay, good. So let me put on the video, which is here. Which minute should we start on? I thought you said 16.
Okay.
Okay. Can you see yourself on screen?
I certainly can.
Okay, I put it.
But that's okay.
Okay, so I put it on, right?
It's at 16:47.
Volume. We can't hear it.
Carlos, can everyone hear me?
No, I can't hear.
Carlos.
We checked it out and it was not too loud, but we could at least hear it. Now we can't. Ah, there you go. have to say, though, to the audience that this video was specifically recorded for us. Okay.
All of the above is to say that
Not good.
ICOs need better support.
Okay, so I need to start discharging a little bit my machine. It's buffering.
Are adequately protected. So not just the investors, founders as well. Now, I am not saying that ICO should go on regulated crowdfunding platforms because of to what they're due to deliver can be.
Okay. Hi, we have a guy from Ethereum, I think, here, and he wants to present his project. This was not on a schedule, but why not? We are an open meetup. Thank you for coming.
Yeah, my pleasure. My project was the DAO, actually. I worked for Slockit, and I was the community organizer for the DAO. And I'm actually here because I'm working with Jordi Bellina, who's an incredible developer that I met through the DAO. He actually created liquid democracy for the DAO. We never got to implement it, of course, because, hey, the DAO didn't work out, huh? So, but now we're working on a new project called Charity DAO. But I just wanted to, actually, our project's called Giveth, but we're working with the Slockit guys to reuse the DAO code for a charitable purpose. Take out the for-profit, make it smaller, and revamp the code. So the DAO will live again. Watch out, guys. Sell your Ether now. But just kidding, please. Don't sell Ether. It's low enough. I wanted to talk just a little bit about DAOs and try to keep it simple because DAOs seem really complicated, but they don't have to be. All it is, it's the same with any organization. It's a set of contracts that create an incentive structure for people to work together, right? In most organizations, you'll have legal contracts that say this person works for this many hours doing this kind of thing. And with DAOs, it's the exact same thing, except instead of using legal contracts that are enforced by judges and lawyers and that whole bureaucratic system, we use smart contracts that are enforced, well, for DAOs, generally, you use smart contracts that are enforced by a blockchain, a bunch of miners that say this is going to happen no matter what. And it's really just the same thing. You still have humans involved. We're just creating another ecosystem for a contractual law. And that's really exciting to me, that pretty soon computer engineers are going to need to get law degrees. There's already lawyers that are learning Solidity in Switzerland. It's like it's a class in law school to learn smart contracting programming. So don't let the Bitcoin code stuff get too crazy for you. It's simple. It's just another system that could be really revolutionary for all of us anarchists. That we can opt out of the legal system and forget about centralized control and move into another system that it's still pretty raw. Legal systems have had thousands of years to evolve. We're going to need a lot of time to get this stuff put together, but it's looking pretty promising. So thank you.
Thank you.
Can be a tricky thing. Now, surely, if you were paid to do a job, you would have milestones to reach, and that your remuneration as a project owner would be tied to
I think we're ready. I rebooted the machine. I hope that we can hear it okay. And then we have Adam online and William, and we will start the panel.
And with that in mind, it is the role of the crowdfunding platform to provide that independent due diligence on the project at hand, which I mentioned above. Now, this is not the same as doing a listing on a regulated stock market. Not by any means. Listing understandably involves an extensive amount of due diligence. All of the above is to say that ICOs need better support to ensure that investors and founders are adequately protected. So not just the investors, founders as well. Now, I am not saying that ICOs should go on regulated crowdfunding platforms because of that independent due diligence on the project at hand, which I mentioned above. Now, this is not the same as doing a listing on a regulated stock market. Not by any means. A listing, understandably, involves an extensive amount of due diligence. All of the above is to say that ICOs need better support to ensure that investors and founders are adequately protected. So not just the investors, founders as well. Now, I am not saying that ICOs should go on regulated crowdfunding platforms because of the independent due diligence. No. As I said, we cannot change the trend that is currently happening within ICOs. Whether you agree with it or you don't agree with it. But we can think of new solutions, and that those new solutions can support the existing trend in a way to mitigate the damages, potentially for the whole community. If you think about it, if the Slockit DAO was not bailed out by the Ethereum protocol, then my question to you would be, would ICOs be happening every day now? Would the overall confidence in the ICO community be there? So because the damage hasn't occurred yet, and that the damage to public confidence has not occurred yet, we still live in this exuberance of ICO culture. So let's look at the problems again and think about potential solutions. What I'm presenting here as a solution is just really food for thought. I'm not saying that this is a thorough analysis into every single problem and every single solution. It's food for thought. As I said, it requires a new trend, and that new trend I can see the thought here that it requires an industry to come behind it for it to come to life. So as we said, really in summary from the 4 or 5 problems we identified, is that the key problem around an ICO is accountability. Accountability of the founders, the corporate structure, and on delivery. So the solution is to hold the founders accountable. And I suggest that this could be done in a pragmatic way that would not necessitate a crowdfunding platform. I suggest that an independent third party assists the ICO issuer. Now, this independent third party doesn't need to be a regulated person necessarily, but they assist the ICO issuer in simply verifying certain statements of fact made. That same third party can hold the ICO issuer to account on the milestones that they themselves set. I am referring to this entity as an ICO verification agent. This agent receives the data from the ICO founders, reviews and verifies the statements made, much like you would expect an auditor to do. And the service or the evidence of verification could be on the blockchain, of course. They could sign with their private key statements recorded on a blockchain, possibly even in the genesis block of the ICO. Now the question is, what is the scope of the role of the verification agent? Does the verification agent owe a duty of care towards the investors in the ICO? I would say, based on where we are at with this community, that they should not owe a duty of care to the investors, because no verification agent would want that level of exposure. They would not be able to accommodate that level of exposure. The real design should be that the verification agent is simply contracted by the project owner to provide independent verification services. So what would it check? The best way of approaching this is to have a standard format token subscription document. This would be a template, a one-page document really, that every ICO would use. And in that document, the most basic but essential details about the project would be in it. Who is behind the project? The name of the incorporated entity issuing the coins, country of incorporation, allocation of funds, designation of milestones for delivery, and supplementary services, which we'll go into involving the verification agent, such as co-signing ability of the verification agent to release payments based on milestones, a verification agent as arbiter to act in the event of a dispute between the coin holder and the issuer. Now, the verification agent, and this is key because, as mentioned before, a lot of these tokens actually fall foul of securities law, and it would not be feasible to imagine a verification agent to be involved in assessing whether a token is a security or not. That would entail too much risk. Agent, as you said before, by removing the duty of care to the investors, and now by removing its role in defining whether a token is legal or not, it is able to still perform some role, which is to verify statements. So the verification agent would not comment on whether the token is legal or not, or regulated or not. This verification agent, in essence, is there to check that the founders have done what they said that they have done, and do what they say they will do. Now, of course, if the verification agent learns at a later date that the token is illegal or regulated, then it's able to withdraw itself from those simple verification services. Two other envisaged roles for this agent would be to act as a co-signer on milestones achieved, and to act as the arbiter in the event of dispute. And don't get me wrong, because this should be ringing some bells for you guys if you've been in this sector long enough. People have tried to do this before. It's not new. But they've always been involved in issuing the coins and dealing with this question of whether the token is a security or not. And that, of course, brings a lot heavier risks for the verification or this verification agent, which are really not warranted. It's important to remove those risks in order for them to perform a very simple function. Simple but essential function. So in essence, the role of this agent is to be independent and to verify the state. In terms of co-signing abilities, you could envisage the verification agent to provide a co-signing service to ensure that the funds are spent in accordance with what they said in the subscription document. But that co-signing ability would be passive. In other words, the verification agent would not be able to initiate a transaction, just simply confirm. I would envisage that if this institution was created, that it would service all ICOs, that it would be very much like the equivalent of the Ethereum Foundation or any foundation supporting a protocol, but at a more abstract layer where it is agnostic to the protocol, but just services the people wanting to create new protocols or create applications on protocols that involve a DAO ICO. But for this to work, it is critical that this verification agent at this point is not required to be regulated in order to perform its function. So here I have given you a schematic of a potential solution of addressing the problem of ICO accountability. This is not to say that I'm giving you legal or regulatory advice if you want to go and set up this service yourself. Of course, more detail is required. But there will come a point where consumers will get burnt with ICO tokens, and that public policy will start to drive enforcement in this area. It is important to remember that fines imposed by regulators apply retrospectively to your activities. There is this word called disengagement, which is the notion that you are not allowed to get away with the profit from making the fence. So if you issue tokens, made $100 million, and then were found to have issued a security, and the $100 million could be disengaged from you. That's the simplification. So it is important for the industry, in an almost self-interested way, to come together to consider better and fairer ways of doing ICOs, more accountable ways of doing them. And that those ways, I've outlined a potential way, should allow for the consumer and the founder to be protected, and the founder itself to be accountable. This is surely the minimum, base layer. So really, in conclusion, it is important to think about ICO governance from the start of a venture. My assumption is that out of every 10 DAOs to be created in 2017, 8 will operate under some form of ICO. Therefore, I am prioritizing ICO governance for DAOs first, because that is where the risk will be. If we can get that portion right and establish a good form of governance in institutions, the ICO process, then as we move into the next phase, which is maintenance of the DAO, at that point we should expect to find the same standard of governance in that area. Basically, it's better to build your house on a solid foundation. And we would all accept that logic. It's been a pleasure speaking to you today. And if you've got any questions, please don't hesitate to ask. Thank you.
Okay. Thank you, Adam. I'll put the video conference on the big screen. Okay. And try to minimize. Thank you, Adam. Hang on. You're still not on the big screen. Hang on. Thank you, Adam. There you go. Switch off the chat. Okay. And I put on the camera for our panelist here in Barcelona. As you may have heard, we have an unexpected guest from a slug.it team member who wanted to be part of the panel, and I think it's very interesting to hear his thoughts from a slug.it and experiences. .it team member who wanted to be part of the panel, and I think it's very interesting to hear his thoughts from a slug.it and experiences. .it team member wanted to be part of the panel, and I think it's very interesting to hear his thoughts from a slug.it and experiences. .it team member wanted to be part of the panel, and I think it's very interesting to hear his thoughts from a slug.it and experiences. .it team member.
I can hear you. I can hear you.
Yes, there was some echo and delay, but now it's still.
I can hear you. I can hear you.
There's definitely an echo from my side.
Definitely an echo.
Is this thing on? Oh yeah, we're hot.
Okay. So you can see the speakers. Can you hear us in time, or is there a lot of delay? Because otherwise we need to change the app or something. I don't know what's going on.
Flip this one.
Delayed, right? Should we try? Hang on.
Maybe it's better.
Yeah.
It looks like it's more about bandwidth. It looks it's more about bandwidth.
But I think we tried it once in our community also. This happened, was not working well. I think Hangout is probably better.
There's a lot of delay.
Sure.
Okay. So Adam, which account do I send the invite to?
Just adam@diacle.com.
Okay, good. I shut this down and open the Hangout, okay?
In the meantime, should we entertain?
Yeah, please.
How do you guys want to do this? Ask questions or have them ask questions?
Yeah, well, maybe we use the time for questions in the audience until the others are ready. That's maybe a good idea.
Any questions, guys? Oh yeah, one in the back.
You need to walk.
You can.
Hello, everyone. Okay, I am in this group, the Bitcoin Bay from Canada. So they know that we are in this Meetup today. So this guy, Jerry, just asked a question for Fernando from Dash. He says, if you could explain basically what advantages or main difference Dash can offer in comparison to Monero or Zcash that just launched a few days ago.
Yeah, absolutely.
I guess that he's talking about the advantages of our privacy features in comparison to Moneros or Zcas. We have a completely different model. In fact, Dash is not anonymous like Monero has. Their cryptography and Zcas also is different. You can't really check unless you break the cryptography. What we do is obscure a public blockchain because our blockchain, like Bitcoins, is completely public. So we rely on mixing funds. This gives you a plausible deniability because you can be certain what funds come from where, but everything is public in the blockchain. For this to work, you need to trust on whoever coordinates the mixing. And in our case, it's the master nodes, and it's one master node after another one because there are different rounds. So in order to be able to control all the master nodes that are involved in mixing, we added some statistical analysis, and you would need most of the network under your control to really be able to fully trace. But as I said before, it's plausible deniability. You may be among the 200 people whose funds are there, unlike with Zcas or Monero, which you simply know nothing. The good thing about our solution is that it's much more flexible, and it allows for mobile wallets, light clients, and many things that with Monero, as far as I know, would not be possible. The CCAS model, I don't know that much. I'm trying to read more about the project, but it's really early on. But basically, it's different model. It's more flexible, but it's not anonymous. We don't sell it as anonymous. What we try to get is fund fungibility. So every coin is equal to any other coin, unlike in Bitcoin, which there are tainted funds because they are two hops or two jumps away from the Silk Road market or from a known hack. With mixing, you break that and all funds are equal, and that's what we are trying to achieve.
I can comment on that too. Dash is just way further along than Monero or Zcash. Zcash barely exists, and Monero doesn't even have a UI wallet yet. Whereas Dash, I have a Dash app on my phone. I can send privately. I can also do instant send. They have a really good funding model. They have a really far development. Whereas Monero and Zcash Monero is not very new, but they haven't had a lot of development on their chain. Whereas Dash, because of the DGBB, the digital governance by the blockchain, they have a really solid team of people that actually are pushing forward every day and have been for years. So I don't know. I'm a big Dash fan. I actually think it's. I hear Amanda B. Johnson say this all the time. She's like the spokesperson for Dash in a way, and gets paid by the governance model. But Dash is really where Bitcoin should be at this point with all the development. Yeah.
No, I just wanted to bring it a little bit in relation. I'm a big Monero fan. I also like Dash, but I a little bit a wrong comparison to bring it in this. I mean, Monero has a lot achieved on the cryptographic layer, and yeah, they have done amazingly important work, which might be get moved over to Bitcoin someday, like ring signatures and confidential transaction. So I think to just compare it from a mainstream perspective, because it's easier to use and you have mobile wallet, that's not really fair to, and they have a very strong development community. That shouldn't say that Dash is not great as well. I just want to bring them. I mean, they are both great. And
Monero is great. It's just a different project with completely different aims.
Okay, we have another question, I think. How does, I mean, in Dash, the 1,000 coins that you need in order to be a super node, or the 10% that goes to the developers and 45%, is everything hard coded, or do you have a scripting language that lets you change this dynamically? And besides that, how do you implement the distributed voting system if you don't have that scripting language? I mean, at the end, if the voting is taking place on the web through a regular database, then it's not distributed, okay? I mean, so the question is, do you have a scripting language which is integrated and it's Turing complete, integrated in the blockchain?
I'm not a coder, so please take everything with a grain of salt. But the 1,000 coins for the masternode requirement, it's hard coded. It was hard coded a couple of years ago, and we could change that. But we don't believe we need more than 4,000 nodes, so we don't really think we need to decrease it to get more nodes. The 10%, it's also hard coded. But it's not really fixed. If there are no proposals that gain enough approval, those funds won't get created. So the base will be lower because they were expected to be created and they won't be. And regarding scripting language, we are about to launch something in that regard. Lead developer says it's Turing complete. I haven't gone into code. I'll take his word for it. It will allow, as I said before, to create some complex structures in our system that will hopefully increase the things we can do and have some contracts and things like that. But the things you were asking are hard coded. Oh, yeah. No, there's no central database. It's in the blockchain. It's basically the masternode signing messages that go into the blockchain. That's something that also we are working in to improve that, because right now when you open your wallet, you need to sync the blockchain, but you also need to sync a lot of additional data, which is all those votes floating around in the blockchain. So there's no central database. It's all messages signed around and referring to other objects in the blockchain, which are the proposals.
If there are no questions concretely, maybe we should move a little bit to the DAO topic.
Wait, we have more questions. Peter, hello.
Hi, thanks very much for your very interesting presentations. I just wanted to ask a question. Is the BitSquare presenter still there? Because I haven't got my glasses. You're just spots in the distance. Okay. I didn't understand completely how the BitSquare sponsorship concept works, but I kind of think I got the gist of it. And I was wondering, is it mainly dedicated to work on for the blockchain? And the reason I ask that is because if things like DAOs and the Dash DGBB systems like that, if they can be made to work for the blockchain, then they can probably be made to work for other things as well, like for building schools and roads and do what the credit markets do. And that really ultimately must be the goal, is it not? Because that's adoption right there. If you can monetize non-blockchain oriented work in the same way that you can monetize blockchain-oriented work. And just one other point on that. From the point of view of the way the credit markets work in the main economy, which is what we're really wanting to eat into, they invest in two things: bonds or equity. In other words, when credit markets put their money into something, they either get a share of a company or something like that, or they get a signature that says, I will work for the next 25 years doing economic activity, to grow your investment. If it's a mortgage, then they'll be paying their mortgage back with interest. So the crypto analog of those two I see as ICOs being equity and DAOs being bonds, because the DAO is, well, the Dash DAO is really monetizing labor. Somebody says, give me this much money, I'll do this much work. On the other hand, an ICO, you pay the money, you get your coin, so it's more like equity. So the BitSquare concept sounded to me like it was starting to drift into doing what the credit markets are doing. And Dash has had a proposal about that as well, but it was just a little bit more, a little bit too ahead of its time for the state of the industry. So I was just wondering if you could maybe expand on the, if you had any ideas about that, how this would progress away from the blockchain and out into the main economy.
Yeah, maybe I explain a little bit better in detail how this sponsoring model works. That was very short. So the main idea is that the people who are working for the project, that they should get paid from somebody. I mean, the ideal solution would be that they get directly tokens paid, but that's technically difficult and especially legally difficult, because everything what you're constructing, which is similar to shares or to securities, you have a lot of troubles on the legal side. So that's basically a no-go from the legal side. And so we are limited to this app coin model, that you're creating a token which is used and which is needed for using your application, your service, and you create an economy. So some people are generating the tokens, others are consuming the tokens, and then there is a market. And by the expectation that the project will have a higher value in the future, the value of the coin rise, and that's the way how the funding and how the value gets in. And many projects like Ethereum are using this model. That's basically a standard model which is approved by many projects who have put a lot of money in the legal side also, so that seems to be very safe. So that's one restriction. My previous version was more like shares, that the contributors get, or the stakeholders get paid this trading fees and so on. I have no problem from the content to make something like shares on the blockchain. It's just this restriction from the legal world that we cannot do this easily, at least, or then you have to follow all the regulation. You need millions to spend. And yeah, back to the sponsorship model. Also, when a contributor, which can be anybody who works for the project, like a developer or designer, when he has done some work, anybody can pay him in Bitcoin the money what he's asking for. For instance, he wants 5 Bitcoin for his work, then I can send him 1 Bitcoin, and in return that I'm sponsoring him and I'm like donating value into the project, I have the right to issue myself Square tokens. Technically, it works a little bit like with mining, or it's on the Bitcoin blockchain. You can verify all this data, that it's a valid proposal, that people have voted on this proposal, then it was accepted, and the data is all in the blockchain. This is a Bitcoin transaction, so you can verify I have sent 1 Bitcoin to this valid proposal Bitcoin address, and in return I can create myself 1,000 Square tokens, for instance. And yeah, does this answer your question more or less from the sponsorship model? To expand this outside of blockchains might be difficult, because I mean, to have a digital currency, there is no other way like blockchains. I mean, that was the invention of Satoshi, that he has solved digital cash in a decentralized way. And I cannot really imagine to have a decentralized and censorship-resistant model outside of blockchain technology. I don't see a way how to do this. To make it not everything needs to be decentralized. I mean, when you want to make a value transfer system in an organization where there's already trust and people work together, then you don't need a trustless system where in a global system, often it's enough that you have some organizational form and you just want to have a cheaper and a more transparent way to exchange values. That's something what the Fablab people are very interested. The Fablab exists globally, so there are many places all over the world, and there are many people who are putting their effort working for Fablab, but when they move to another city in New York or so, they don't have their reputation there. They don't know, nobody knows them or so, and then they cannot take their value, what they have here locally, because of all the work what they've done. They have created reputation and value, and they can use this usually in normal communication. People know each other and so on, but it's not very transportable. It has its shortcomings, and I think cryptocurrencies which are not really decentralized might be good enough for such situations, because there's already a trust relationship between those people and so on.
Okay, questions? You had one.
I think one of the things I was thinking about in terms of DAOs is that your this is a sort of a general point, I guess, but if you're looking for money in a VC context, generally there are probably two things that ideally you would want from your investors. One is that it's added value, financial capital, and that there is more than comes with the participation of the VCs, apart from the actual capital that they put in. And the other is that you actually want the capital to be both smart, smart, but also patient. One of the things that I've kind of seen, or at arm's length, I think, in the crypto scene, is that there's a lot of liquidity where you actually really want sort of liquid democracy, for example. You want liquidity in terms of transparent decision making on a granular and on a regular basis, but you actually want patient and persistent capital, and you don't actually really want spikes in activity. And if anything, what we're having right now, or at least what I'm observing, is actually the opposite of that. You've actually got opacity when it comes to governance, and then actually leads to sort of major disagreements on the governance side. But you also have far more liquidity on the capital side than you would otherwise want. So I don't know quite how, in general, you actually invert that into a situation that would, for example, disintermediate VCs, or to be an evolution of venture capital.
Well, what I can say is that you want both, probably. Ideally, you would want a community of people who is invested into your project that require transparency, because with that come contribution. In Dash, we've had many proposals that have been shaped by the community. That in that discussion with the people around, they've changed a lot, or have been nixed directly and never came to existence. But on the other hand, it's true that day to day it's really hard, and when you operate on that level of transparency, the minute you put money into a community, dynamics change a lot, and they will scrutinize everything. You need to work in a different way. You need to have thick skin, because a lot of things happen around that. So I don't know what's the answer. I know you want both things. I don't know how to really mix them. We are working on that. I think transparency is great, and it helps a lot to shape the project. And I guess it's a problem of communication. If you have transparency, if you have good communication, you should be able to get patience from the people in the community. But also it's difficult for certain things, like projects that you can't share publicly. Sometimes we are approaching partners and they don't want us to talk publicly about something, so it's almost impossible to get funds for that. So it has also its drawbacks. So having also some part of the project that could be operating on a way similar to like an investor would be great. But I think that, I mean, if you have to work somehow, I would prefer to have too much transparency than too little.
Yeah, I can jive off that. Transparency is everything in this in the crypto scene. That's you need it because the internet is a tough place, like you're saying. I mean, Reddit is just, if you want to push any, if you try anything, man, they will get you. There was a group that tried to do an ICO for kind of this hacker gold Ethereum space, and most ICOs, it's just like the money just flows because, as you said, the liquidity is ridiculous, and everyone has a lot of ether, and it's so easy in the crypto space to actually invest in projects, and that's something people forget. It's not like even in Kickstarter and all the other crowdfunding campaigns, you actually have to sign up for something. You have to put down your name. You have to like look at and read on stuff. Here in the crypto scene, you literally like copy paste an address and push a button, and you just sent $1 million to something.
It's very easy to lose money.
Yeah, it's very easy, and that's why transparency is key. And if you aren't playing that game, you're going to get reamed. And there have definitely been some projects that have gone the tough end of the stick on that.
But I think it's really a very problematic area where we are. I mean, we're seeing at the moment a lot of ICO. You get a few millions for just a rough idea, which is often not well thought, and there's no prototype and no implementation, nothing. You would never get this money from a normal venture capitalist who are doing much more due diligence and have much more experience. So it's at the moment super easy to get money in the crypto space, and it's not the smartest money what you get here. And the damages which get created by this, because most of them will fail, and then people are suffering and go to court or whatever, and the damage will be everybody in the space has to carry then the damage. There are a few guys who are making a lot of money very quickly, and then the damage will get collateralized to everybody. And I think that's a very damaging and very negative thing what's going on. It's not new, it's already going on since a while. And I hope at least that, I mean, people have to learn when they are losing money, okay, does it next time, hopefully they are more carefully. But it's not just, and that's basically why we have all the strict regulation rules. I mean, when it was more than 100 years ago with securities, in the beginning it was the same like here, Wild West. Everybody was doing IPOs and collecting a lot of money. Most money was lost and very badly invested, and then the governments came with with regulation to protect the general public, and they wanted to have these new tools like public companies because it was a value for the society, but they didn't want to have the damage. And to mitigate this, they created all the regulation, and we are still suffering from this highly regulated environment that we today cannot do things easier. But the cause of all this was the scammers who had created public companies and just scammed people. And today, many people who are irresponsible in the cryptocurrency space. And as Adam said before about the ICOs, my suggestion is to not make ICOs at all. When you want money for your project, ask for the money for the next 2 or 3 months and then deliver. Even if it's just a paper or a concept, deliver that what you can deliver. And when the community can see that you really make progress and that you are worse in this, okay, then go on for the next 3 months. Then everybody's just risking 3 months. That's a few €1,000 or something, and it's not millions which get burned. But most projects are collecting 5 million, and this 5 million will go nowhere. It's lost money, and then probably the regulators say, hey, in the crypto space, they're happening so much scams and damage, we have to do something there, and everybody's suffering from this.
I think you hit a really good point on that. I know we're about to get him in, but the incentive structure behind a lot of these things is just not there. And I think that's going to evolve really quickly because of smart contracts. And just in the project that I'm working on with Jordi, who's a very proud Barcelonian guy, by the way. If you ever need an SDev, you should find him. But I'm looking at the charity infrastructure, and the incentive structure is all wrong. You get money as long as the problem exists. But if you actually solve the problem, if you end world hunger, people aren't going to give you money anymore. I mean, it doesn't work. And it's the same with these ICOs. Raise a bunch of money, but don't hold yourself accountable for your actions. It's not going to end up working. But I actually think that we're moving in the right direction here, and people are starting to realize that, and we have the technology to actually change it. So it's looking pretty good.
I don't know if you're on mute or I muted you. Hang on. Adam, can you try now?
Hi, can you hear me?
Yeah, absolutely.
All right, okay, I'll just go straight to the point. From my point of view, the ICOs at the moment are really following a very bad trend. And, you know, I'm saying that because I care about the ecosystem evolving. If an ICO goes bad, then it destroys public confidence, as you already said. And when that happens, it creates an issue around public policy. So public policy will drive the enforcement, as I said before. And so from my point of view, also, a lot of token issues, let's be quite frank, involve some element of revenue sharing. And most jurisdictions would deem that to be a form of share or security, regulated instrument. Now, I'm not going to dwell on that, whether it's illegal or regulated. That's not the important point here. The important point is we can't reverse that trend because people will continue to share network fees and share transaction fees because they want to distribute this organization. But what you can do at this stage is try to instill some framework which will guarantee a level of public confidence. And I really don't feel that people who are following the trends of ICOs are being creative enough, to be frank. They are with smart contracts, but not necessarily with governance, and in particular, ICO governance. I mean, for instance, I saw one ICO the other day where the gentleman was receiving $10 million in their Ethereum wallet, but there was no legal entity that the person was entering into a contract with. You know, these are very basic things. They should be sought out before and dealt with before. And to be quite frank, if you were raising $10 million in any IPO market, there would be a number of requirements to ensure that what you are saying is actually up to scratch. And so, in my opinion, I'm not saying that these things need to be regulated per se. I'm just saying that the ecosystem needs to be a little bit more creative about providing that support needed for these ICOs to continue, because we're all in this kind of exuberance of the ICO because we haven't felt the consequences. And when we do, then things will start to change. But luckily, nothing too bad has happened yet. And so I would suggest, you know, if we care about this industry, we care about having good ICOs and good projects reach fruition, that we should be thinking about building those institutions.
Okay, we have 10 more minutes to another question or two, maybe. Last question.
Maybe answering the question that gentleman asked before, can you imagine that maybe, because you said you couldn't figure out how your ICO would work outside of the blockchain, but actually there's some initiatives, like I think a guy which is called, well, I don't remember his name. They are trying to do currency with which you can pay your tributes, your local tributes. So you could pay, like, for the town hall, you could pay like the garbage collecting tribute and stuff. So that would be the coin that you want for something. And then you could have people working and stuff, which would be the contributors to the blockchain. So you could maybe use the blockchain and the colored coin for the part of the value transactions, and then having the labor not for contributing to the project, but like building schools or something like what he said, and then having the coin being burned by transacting with the local government or something like that. That way, maybe you could have like a distributed autonomous organization working using the blockchain for currency.
out into the credit market?
Yeah, it was a little bit hard to understand everything, but I try to give an answer. I think you can build all kind of stuff outside of the blockchain space, but you have to be aware that it's not decentralized, and it's you need to trust somebody. Like, I think the government of Barcelona, they want to make a local currency, and they want to pay the people who are working for governmental companies or organizations, that they get paid, and they can then spend this money and so on. So they want to create their own ecosystem with incentives and so on. And it should basically help that people are spending the money more locally for local economy and so on. It's good ideas. So I'm perfectly fine with this. You just cannot compare it directly with Bitcoin or something which has the approach to be really censorship resistant and global and trustless, that you don't need to trust. Because this currency for Barcelona, for instance, when the next government is in place, maybe they shut it down and your money has no value overnight. And we see such stuff happening. What's going on in India at the moment, it's kind of like break of contracts with the people at the end, that your bills overnight has no value anymore. And when you're not fast and can exchange or can deposit it in the bank, then you lose all the value. I mean, the governments are breaking their contracts with the people at the end. And with all this, I mean, when you are in a society or in an organization where you have perfectly trust, because it's a small organization like the Fablab and it works fine, there's no need always to make it completely trustless and decentralized and global. But when you don't have these circumstances, then you have to think if you really want to risk, or when it's more value, when it's really a lot of money, then maybe you don't want to be dependent that the government of Barcelona will go on in the next 10 years like this, when you have put your life saving into it. So I think it depends on the context. And I think DAO models or all this, I think what's really new with, not only with cryptocurrencies, but in general with IT and the way that we can design money like we want to have it. We can program money, and money is always political. The way how money works is a decision made by humans, and it can work in different ways. And we can now experiment in we can add different policies to different types of money for different use cases with different properties. And I think we should use this possibility and make the best out of it. And I agree, it don't need to be always blockchain and Bitcoin and such. It has a lot of costs and disadvantages. It can never be so fast and so cheap. And I mean, a decentralized system is much more complex and will cost more resources like a centralized one. So when you don't need a decentralized currency, you can do many other things as well.
Okay, we are almost out of time. We have another.
Just very quickly, I just realized to your point, I'm sure when you were talking about this, and I'm sure many people in the audience are aware of Francesca Bria and what she's been doing since she arrived in Barcelona. Is that better?
Yeah.
I think actually just following on from the gentleman's point and also what you were talking about in terms of Barcelona, I'm assuming that a lot of people are aware of what Francesca Bria is doing in the city. Okay, Francesca Bria is I think the Chief Investment Officer for the work that she was actually doing was, or the project that she was doing immediately before coming to Barcelona, was in London on decentralized complementary currencies. I mean, the thing is that, you know, when you say that there are initiatives that can actually happen outside of Bitcoin and blockchain, of course that's the case. I mean, anyone who's read Bernard Lietaer and actually talked about the whole sort of time frame of complementary currencies over hundreds of years will know that this stuff is not new. But Francesca, for sure, definitely has both a remit as well as actually very clear use cases within the city, and also a crypto reference that I think will actually speak to, I think, some of the broader infrastructure, for example, or institutional applications that you're talking about that are non-Bitcoin specific.
Okay. Thanks, everyone. Unfortunately, we have a hard stop here. I think that William couldn't make it, and I know for sure he had a hard stop. Adam is still on. So if you want to say goodbye to the crowd, it would be great. Adam, just get off mute, or we just... Hello. Okay. Thank you so much, Adam, for your contribution. Your stage to say goodbye, and then we close up. Thanks also to the 3 speakers in the room. I think it was a great event. We invite the people that are face-to-face here in the facility to move on to a bar next door, El Primer Café, and hopefully we can continue discussing, debating, and networking for the people who are still interested. We will have beer and something to eat. Thanks, everyone. I hope you enjoyed, and we will see you in future meetings. Thanks.